Welcome to the Diplomatic Dispatch, where we bring you the latest updates on global markets and geopolitics. Today, we cover a major financial milestone: gold prices surging past $3,100 per ounce for the first time in history. We'll also look at how US tariffs and economic uncertainties are shaking global markets. Let's dive in. Gold prices have skyrocketed past $3,100 per ounce, setting a new all-time record. Spot gold reached a peak of $3,106.50 per ounce, fueled by a combination of economic concerns, rising geopolitical tensions, and shifting investor sentiment. With significant gains this year, major financial institutions are now revising their forecasts, predicting even higher prices for the yellow metal. But what's behind this historic surge? One major driver is the fear surrounding global economic instability. Investors are flocking to gold, a traditional safe haven asset, as inflation concerns and geopolitical uncertainty escalate. Analysts suggest that ongoing US tariff policies and global trade disruptions are playing a significant role in pushing gold prices higher. Meanwhile, global stock markets are feeling the heat. Major US indices, including the Dow Jones, S&P 500, and Nasdaq, have seen significant declines. The reason? A mix of economic uncertainty, inflation fears, and trade tensions. As investors worry about the impact of tariffs on global supply chains, many are pulling out of equities and turning towards safer investments, such as gold and government bonds. US Treasury yields have weakened, and the dollar has also taken a hit as market volatility increases. Investors are bracing for potential economic slowdowns, with some analysts warning that if tensions continue to rise, the stock market could experience further downturns in the coming weeks. The recent spike in gold prices and the turmoil in global markets aren't happening in a vacuum. They are being driven by a series of geopolitical events and policy decisions. Concerns over US tariffs on China and other major economies are rattling global supply chains, leading to fears of a slowdown in manufacturing and trade. At the same time, central banks around the world are closely monitoring inflationary pressures. If inflation remains high, interest rate decisions by the US Federal Reserve and other major banks could further impact financial markets and commodity prices. So, what's next? Will gold continue its historic rally? Will stock markets recover, or are we looking at further volatility ahead? One thing is certain: investors will be keeping a close eye on geopolitical developments and economic policies in the coming weeks. That's it for today's edition of the Diplomatic Dispatch. Don't forget to like, share, and subscribe for more insights on global finance and geopolitics. Until next time, stay informed.